We're back. This is Josh Jalinski, the Financial Quarterback, coming to you live, taking your questions right now at 800-321-0710 if you have questions on stocks, bonds, annuities, mutual funds. GameStop is back in the news. We're not recommending you buying or sell it, but man, I am just concerned with the financial illiteracy of the general public, that they're just crazed by stocks that have low values. Well, folks, this always ends the same in history. Periods of overvaluation, things can go more valued than we ever realize, and then crash. Where are we? No one knows. That's why planning is critical. So we've talked about Roths. Oh, by the way, folks, if you want the book, it's a brand new book, The New Retirement Savings Time Bomb. It will be your free gift when you schedule and keep your no obligation review. So we have inflation. Inflation's already here. I mean, the whole Bitcoin at 50,000, money will always flow to where it's treated best. And dollars are not that place right now. Now, more COVID relief may be additionally beneficial to certain stocks. According to Malden Economics, COVID relief will give an added boost to various stocks. And the House approved Biden's $1.9 trillion stimulus package. I don't know what we're doing as a nation to just think that this money printing is not going to end negatively. I pray for our country, pray for my kids. I really worry about what we're doing to our kids' futures and grandkids' future. Mike has a question. Go ahead, Mike. You're on with Josh Jalinski, the Financial Quarterback.
Hi, good morning, Josh. It's Mike here.
Good morning.
Good morning. Thanks for taking my call. Just wanted to ask a question. I have IRA set up simple and also the Roth. And I've had them for quite a while. And I wanted to know if there's a penalty or if I could just convert and exchange it, the IRA simple, into the Roth instead of having two separate.
Well, you can do a conversion. You're asking, can you convert the simple to a Roth and then combine them? You could. I just don't know if it's wise to do so. I'd have to understand. Is it all pre-tax money, number one? Do you have a mixture of pre-tax and post-tax? So it's all pre-tax. You're paying the tax, making it all Roth. And I don't see what the problem is. You might have to watch how you do it. So call us at 888-988-JOSH, and we can help make sure you do it in the right way, okay?
Okay. I just want to know if there's any penalty or anything, you know what I'm saying?
Is there any penalty to what? Sorry.
To move the money, you know what I'm saying, from the simple to the Roth.
How old are you?
59.
No, there's no penalty. It's just there would be a tax upon the conversion.
Right, only on the simple part.
Yeah, well, only on the pre-tax part, yeah.
Correct,
There's no tax when you move a Roth to Roth. That's just a custodial transfer. But I have no problem if you want to call us. We'd love to talk to you. 888-988-JOSH, guide you through that. So you can move your money from a simple to, basically the way you would do it is you would roll over, you might have to go simple to IRA, then IRA to Roth. Does that make sense?
Okay.
Because your simple is a company plan. So,
right. Okay. All righty.
Unless there's a Roth simple option or something. But, basically you can convert a simple IRA to a Roth IRA, and we can help you do that. Okay?
Okay, very good. Thank you for your help.
Wonderful. Folks, give us a call, 888-988-JOSH, 888-988-5674. If you have questions on stocks, bonds, annuities, mutual funds, no question is a dumb one, except the one that you do not ask. So give us a call now, 888-988-JOSH. So what we'll do for you folks, in today's turbulent markets, you need to focus on what to do with your portfolio in an overvalued market. The market was overheated, coming down a little bit in the last week. You need to have a fiduciary to help you through the ups and downs, and a resilient portfolio at that. So give us a call at 888-988-JOSH. And so we will help you with our portfolios. We have ETF portfolios. We have individual portfolios. We are fee-based fiduciaries. And give us a call, 888-988-JOSH. Would love to hear from you. 888-988-JOSH with any of your questions, 800-321-0710. You get on with us right now. Okay, taxes, no more gift tax exemption. Additional planning strategies to consider from 2020. 2020 was a year of substantial wealth transfer for many families due in large part to the uncertainty surrounding the election outcome and possibility for tax reform in 2021. In particularly, many individuals made large gifts in 2020 to take advantage of the historically high gift and generation skipping transfer tax exemptions, concerned that these exemptions could be reduced under Biden. Although uncertainty surrounding the tax reform continues for the moment, there are still several wealth transfer strategies that you need to take advantage of, or at least consider, by those wanting to make gifts. For those who have already used a significant portion of all their exemptions, we're going to go through some portfolio planning ideas. Creative Planning CEO, we had him on, Peter Maluk, last week, says Biden's capital gains tax plan could kill portfolios. He says an increase in capital gains tax, which President Joe Biden is considering, could dramatically change investment decisions and kill model portfolios. And could dramatically change investment decisions. Also, estate tax changes coming under President Biden. Strategies for those of you to consider. New presidents typically make their mark on the tax code, and the estate tax is likely a target for Biden. The effective taxes on estate planning stretches beyond the estate tax. Those who have different goals may need different tax strategies. That's why getting the book today will be your first step. Give us a call, 888-988-JOSH. Schedule your no-obligation review, 888-988-5674, 888-988-JOSH. So let's talk about 2021 tax planning strategies for you. Number one, make a gift. Even if an individual or a couple previously used their gift tax exemption, you can still make gifts outright. There is a 2021 inflation adjustment amount. The gift and generation skipping tax exemption amounts are currently indexed for inflation. Those exemptions were increased to $11.7 million from $11.58 last year. And so if you're married, 11.7 times 2. Accordingly, each individual has an additional of $120,000 of gift and GST exemption that could be used this year. So annual exclusions are $15,000 per donee, $30,000 per married couple, which don't count against your gift and estate tax threshold. A lot of you think you can only give $15,000 a year. That's not true. You can only give $15,000 per donee. If you're married, that's $30,000, and have it not count against your exemption. So you could gift up to $11.7 million to your kids and not pay taxes on that, because you've already paid tax on that money, by the way. Just it avoids the double taxation of estate tax, which to me is an immoral, ungodly tax. And that, by the way, is one of the greatest ways to perpetuate income inequality, because then new money, they don't get to share it. They don't get to pass their wealth to the next generation. So that's sort of like an estate tax is sort of like insulation for the super rich. It's only they can pay these taxes. Direct payments for tuition and medical expenses without depleting the annual exclusion or gift amounts. Individuals can pay for educational, dental, or medical expenses for family members as long as the expense is directly paid to the provider. That's a great benefit. Number 2, the grantor retained annuity trust. A grantor retained annuity trust is an irrevocable trust in which the grantor, that's you, makes a gift of property while retaining a right to an annual stream of payments. So you can use it for a variety of assets, included concentrating positions. So you want to look at grats. You also want to look at selling things to grantor trusts as well. And those are different ways that you can take advantage of the estate tax. And the other benefit would be what's called an intra-family loan, where you can make loans to family members at lower rates than commercial lenders without the loan being deemed a gift. Very powerful strategy. So we will return with the next question is Maria. How long can she keep an inherited IRA? We'll be back with Maria's questions and yours at 800-321-0710 if you have a financial question, and call us at 888-988-JOSH for the free book, The New Retirement Savings Time Bomb. We'll be back as we do this.
The preceding program was sponsored by the Jalinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to affect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.